This instructional video is an overview of the Sales Plan and Sales Assumptions Worksheet tab. This page needs to clearly outline all of the assumptions you make in terms of how you plan on producing sales or revenue. During due diligence with any investor or lender, this will easily be one of the most critical parts of your plan, as most startups fail because of a lack of revenue, and many plans are completely inadequate or wildly optimistic when it comes to sales. This part of the startup financial model was put together to help entrepreneurs deeply understand and develop their assumptions, and to provide clarity and transparency for investors or lenders. First, let's give you a quick overview of the page layout. This page is set up with the market information at the top, then the unit sales plan, then the key revenue components, and then the direct costs driven by those sales. Directly below is the assumptions section that clearly lays out each assumption made. Two detailed charts in the instruction section are below the assumptions section. Let's now drill into this page to explain how it works and the rationale for laying out your sales plan like this. This particular plan was written for a business that designs self-service kiosks and has two types of customer relationships. They either sell a kiosk directly to kiosk operators, or the company places the kiosk they own, called company-owned kiosks for sake of clarity, in a venue, and the company then takes a revenue share from that venue on the sales driven by that kiosk. I like to start a sales plan with the market data at the top because the initial question every entrepreneur should ask themselves, and to be able to defend, is the size of the addressable market and its growth rate. And it should be clear what portion of that market you expect to take in terms of the penetration rate. In order to start with the current total market size, we're going to research the market size and put that number in the Assumptions tab and clearly source where it came from. I would strongly urge that you get at least 3 sources for your assumption and take the average of the 3. Not only do you want to make sure you understand the opportunity prior to spending too much time on your plan, but you will need to defend your research during investor due diligence. In a similar way, we will research the growth rate and, for simplicity, convert that into a monthly growth rate and put that number into the assumptions table with the proper sourcing. These two items, along with your revenue assumptions that are pulled from your revenue section, will populate the market data section and help bring clarity to the market demand, your sales levels, growth levels, and penetration rates. A plan would usually be considered wildly optimistic and lack credibility if you were expecting to grow into a market share position in the double digits in the first 5 or 6 years of the plan. This plan looks to grow to just over 5% of the market. The unit sales plan starts with the beginning installed base, adds the sold kiosks, the company-owned kiosks that are placed into the market, and a total installed base. This kind of view is always helpful to see the growth of new units plus existing units. The next 2 sections are the output on sold units and leased company-owned units, with everything driven by the assumptions table. The cost plan section also pulls from the assumptions table and clearly shows the direct costs associated with your sales. These revenue and direct costs are pulled directly into the income statement, as shown on the formula bar of the income statement worksheet tab. In the assumptions section, it is important that you clearly lay out all the key assumptions and the sources for those assumptions, as we show in this example. A couple of items to note in how we suggest you lay this out. One is that we are not assuming sales in the very first month, but have a simple assumption that can be changed by the month number that drives all sales in the plan. It is much more likely that the first few months are spent developing the revenue pipeline, so our plan easily accommodates your scenario planning by enabling you to simply change this one sale to see the impact. For example, you might not have any sales until the 4th month of your plan, or the 6th month, or the 3rd month. Also note that since most companies will ramp up monthly sales levels over time, that we've built the assumptions table to easily accommodate various levels of sales by year. We've also laid out all of the detailed assumptions on pricing, price increases, royalty rates, and whatever else is relevant. Please note that most of these sales are brown, which means you should enter these assumptions on the Scenario tab so you can see the overall impact of each assumption and the plan's relative sensitivity to that assumption. We will explain that more in the scenario analysis video. The 2 pre-built charts clearly show your market size and penetration assumptions, as well as your sales mix over time of the different types of revenue. The instruction section below lays out the 5 steps on how to fill this page in, as we've just talked through.